There we go. Going live. Congratulations, I'm live. And pop out the chat. Alright, so first thing, I have an air conditioner going because it is too hot for me. I'm just wondering if you can hear it in the background or not. If you can't, I'll leave it on. If you can, I'll turn it off. Dun, 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 dun. Oh. Okay, I think we finally got stuff set up. I don't know why it was taking me like so long. My camera wasn't, or looked like it was working, but I had some wrong OBS settings, and now it looks okay, I think. But it looks like there's just like constant noise from my my mic. So let me know. Can I filter? I think I'll just turn it off. In case somebody needs to watch something later. So, alright. Well, let's get back to the YouTubes. There we go. Cool. So, one thing that I said I was going to go over was the where can you sell against a poor man's covered call and still make sure you're safe. I should probably just bring my account up before we, let's see. I wish everything didn't disappear momentarily every single time. Let me grab mine and we'll grab an example. What's up, Joe? Yeah, it was a very good week. I'm my biggest shocker is the fact that Tesla didn't drop after there was no oh, by the way, we're done with the Roadster, by the way, Cybertruck is released. And I mean, even though they have I guess the Model X sitting right there, I just been so conditioned to expect it after an event. So that's just unreal. And then, as you know, I caught I caught two of the meme stocks, Clover, which that was nuts. It still, meme stocks still scare me. And then I caught SENS, which I guess it's being short squeezed. I don't know if it was on the list of meme stocks or whatever. I had bought it six months ago, based on someone I know whose wife is a doctor, and she said it was they had something absolutely groundbreaking for diabetes. So I grabbed it for super cheap, and have been adding to it. I'm gonna pour myself something to drink here. I'm thirsty. Running around doing Costco stuff today. All right, let's grab. So, hey, where's my stuff? Hey, I don't have any options. Options? Hello? Display? What is going on here? This sucks. Well, I know let's see if I can look at it through Palantir. Can I even look at an option right now? This guy's side. Alright. So we'll look at Palantir. And Joe, was it you that was asking about that? About where, I can't remember where you can sell against poor man covers call. Make sure you don't have any problems. But it is super straightforward. So basically, all we need to look for is what we paid for it. So in my case, does it show? Every time I jump on these things, I I realize that I don't do the desktop version very much. Let me see. Can I grab my? I wonder if I can grab a little whiteboard action. I think we can. Okay, cool. Let's see. Where's my? Oops. Let's see if I can grab my whiteboard. So let's see if I can flip back and. Can we clear this guy? All right. So stick this guy to the side. Make sure can we write on this thing? Yes. So we'll take a look real quick at this poor man's cover call I have on Palantir. And basically what we need to look for, really simply, is just this strike price, which is the $20. What we paid for it. So initially I think I paid like $820, and then I've averaged down to 690 on these guys, and that's basically all we need to do to make sure 100% that we're not going to lose anything on this play at all. So we just have our $20, and then we would just add like our 690, which is since 100 contracts, so that's our average price. So at $26.90 per share, so we can sell anywhere $27 or above and have absolutely no risk that we're going to take a loss on this, because the only thing that you're worried about on this is basically you sell a 27 strike price, they get called away from you at 27, and then what happens automatically is this long call gets executed, so you end up paying $20 a share. Then that means you'd sell them at 27, and then that would cover your $6.90 difference. If you were to react to it and it was happening sooner, you could roll out the call side. So am I planning on switching to WEBULL yet? I just want to go to TD, honestly. I think that's just where I need to move everything, and honestly I've just been completely lazy about it, as far as getting everything transferred out of there. I've been just withdrawing money as positions have closed, and actually just putting cash in my TD, so it might end up that way. And then I will have to transfer my shares. Is anybody else's desktop messed up, like as far as this? It's kind of weird. I've never had that happen before. Like literally it shows nothing is. Oh, there we go. There we are. All right. All my green stuff is in red. This is terrible. All right, so there's my meme stock stuff. So we made, let's see, what did we make on this anyways? So we made 432, 335, 346 minus 240 minus 345 minus 280. I hold $250 plus what I made on the shares off Clover, plus I hold those free debit spreads, so if it happens to pop off, but it looks like that stuff's pretty dead. I mean, I don't know if we're gonna have another meme stock week next week. Who knows? Yeah, and I really wish I had more time to switch everything over to TD or WEBULL, but it doesn't seem like Robinhood has taken much away. I think I'll probably just make like the smaller plays on it. I still use TD for my main, like my bigger account, and I still use Tastyworks. I actually had money in WEBULL and was starting to use it, or I thought I was going to start to use it until I found out. Oh, it was before they allowed spreads or something like that. Like the option thing wasn't all done with them at all. Man, too nice of a day to be inside. So let's see, that was the clover plays. Let's see if this populates back. I wonder if it's just my internet. Okay. Yeah, so I think I'll take like yeah, TD does have fees, but it's like one way or the other, you kind of pay for it. So, you know, you're either going to pay like a little bit more for the slippage. Somebody's making like money somewhere. But yeah, TD does have fees, and I think I don't know what they've amounted to. I should look at my last few trades. I actually trade a lot less on TD though. Yeah. But I was looking at like my whatchamacallit, Tastyworks. Tastyworks has fees too, but like relative to the amount I made, I think it was maybe 1% or 2%, which wasn't huge. It's just nice that like some of the other brokerages, you can do them in tax-free accounts. You can do them under an IRA. You can do them under an LLC. That's the big motivation for me to put it under the TD, because then literally everything that I buy, I can write off against it. So whether that's like lights, cameras, electricity, internet, phone, part of my mortgage, boy, yeah, quite a bit. What's a good stock to play an iron butterfly on? Like a lot of people are doing like SPX. I actually have one open. I actually have one open on Tesla. My thought was it was going to go down and come back up. Let's see if we can find it. Let's see. Here's my iron condor. I can't remember. It's just as like a 4 option. Where's my 4 option guy? It's like 4 option custom or something like that. God, I can't see it. Okay, let's see. Credit spreads, credit spreads, credit spreads, 2 cells. Credit spread, credit spread, credit spread, credit spread. Iron condor, credit spreads, credit spreads. I swear I opened one up. Oh, it might see it as an iron condor though. Maybe it does. Let me see. I can't find it. Yeah, Robinhood only allows you to have like one account, no matter what. Oh, Jacob, was it you that was asking about like where we can sell the where you can sell calls at to make sure you're not losing on a poor man's covered call? Because oh, there it is. There it is. I knew it was there. So I actually have an iron butterfly on Tesla right now. 612 being the mid price. And then you can see what the wings are here. So we're up $50 on it so far. Yeah, so it is the super easiest calculation to figure out where you can sell them without any risk at all. And I just went through it, but here, let's take a look again. Planet Palantir. Okay. So I have, where's these $20 calls that we sold? Nope, that's 30. Sorry. $20 calls that we bought. Okay. So this is how you guarantee the profit. So you're going to look at wherever you bought it at. So this is basically what is this? Basically a year to go on this guy. My cost of this was $6.90. So we just add the $6.90 to the strike price of $20. And I just did this right before you showed up. But basically you just take your strike price, your $20, whatever that is, and then you need to add in what you paid for that. So this is the extrinsic value, and whatever that adds up to, $26.90. Anything you sell above that. So if you sell at a $27 strike price, you can't lose, because worst case scenario is the stock rockets up, which I know is kind of counterintuitive that's bad, but it goes up very quickly in a short period of time, and it hits, and it's above the $20 level. It gets called away from you, or excuse me, it would be like the $27, the one that you sold, and then what happens is your long call gets automatically exercised. So you're basically, you use this call, the long call, to buy the shares at 20, and then you're forced to sell them at whatever strike price that you sold your call at. So if you sold a $27 call, you're forced to buy 100 shares at 20 and then sell them at 27. That's a $700 profit, which since you bought this thing, or I bought this thing for $690, that's a $10 profit. So that's like short term, right? That's my $10 profit right then and there. But the thought with the poor man's covered call is you're doing this over the long period of time. So like, for example, I've sold where are my, let me go back. Okay, and what would the credit received on selling? Yeah, so it reduces your cost basis, exactly. So like, for example, I sold these expiring next Friday. I got $10 a pop, so I grabbed $70 on this $30 call that I sold against it. So, and I should be able to repeat that week after week. The reason, and I would normally be way closer. So if I just look at like the options chain real quick on Palantir, I would normally sell these a lot closer to the money, but I don't know why Robinhood's just being, I don't know if it's Robinhood or my internet, maybe both. I didn't see what the stream health is bad. Dang. Try again. Okay. So normally I would sell a lot closer to the money, but my short-term fear was Palantir is sort of a meme stock, and I didn't want it to rip up and then basically like, okay, I'm all done with that poor man's covered call, because I really just want to own the shares. So like since what was Palantir at, like 25, like I really should have been able to sell some, like, you know, maybe 27s, 26s, something like that. I'll probably sell them a couple weeks out. Yeah, so we can still sell like 28s for $17 a piece. But yeah, that just keeps reducing your cost basis like more and more and more. And we're already, like, if you look at it from that $20 level, I only need to be at $28 next June for that call to be like basically pay for itself 100%, and then all the calls that you're selling against it is just going to, it's going to reduce your cost basis. So this is what, 2 weeks, I guess, like 2 weeks out, and I'm selling 28s, and if the meme stock thing dies down a little bit, I'll be a little bit more comfortable with it. But basically every 2 weeks, every 1 or 2 weeks, I'll be able to grab, you know, $15, $20 or something like that. So that $40, $50, $60 or whatever that is over the course of a year, what would that's six times, yeah, it should be able to gain possibly like somewhere $800 to $1,000 to basically make that long call free. You do not actually need the only thing you need to be able to afford is the long call. So that call that I have, and actually you can get a pretty cheap one, honestly. But to start with a poor man's covered call, like this one right here is the one I'm selling against. So this is right now, it's $800. So you would just need, or $813 is all you would need to be able to run this strategy. And if you were to look back, I mean, it was down to 700. I think it was down to like $500 or something at one point. So I mean, you could have grabbed this thing for $450. I think I averaged into it when it was down a little bit, like as low as $500. But you just need to be able to afford that long call with some intrinsic value. So yeah, right now, if you were to mimic the play I'm doing, you'd actually be paying $100 more for it. But yeah, so this one $800, and then as soon as you own that one, you can sell against it. So like you pay $813, you sell something against it, which is $20. Now your cost is $790, and then 2 more weeks it is $770 and $750, and it's just going down and down. And the thought is that this call also along that same line is going to gain value. So you can see like from where I averaged in, we're up $369, so $100 and some dollars. So I've gained $123 on each of these calls on average, and I've also sold against it. So I've probably sold $100 worth. So in reality, that brings my cost basis down to about $590. And if in the long term, over the year, I can sell another $500, $600 worth of premium against it, then that means this call is free, and this call might be worth a couple grand. And you just have to be willing to ride these things out, though, too. Like my first one I purchased at 820. Oh yeah, probably it was right here, April 27th, and they just went down and down, and I did average into it. Really, if I hadn't have averaged into it, I would have been break even on this call, and I would have collected my intrinsic value. But because I did average down and I bought a couple more as they went down, that lowered my cost basis of this call. In order to calculate your profits, it's the difference between your long strike and your cost basis. To like your overall, if we're talking about like your overall profit from the whole transaction, you would need to take, if you take your cost basis, because that's our only real cost there, $813. Like if you were to buy this right now, and then you just need to subtract out, you just need to like literally, let's see, let's clear that. Try to use this pen thing again. So, oops, where'd it go? Try, boom. So like $813, let's say you pick that up, and then let's say you sold one for, $23. So that would be credited back to your account. So now your cost basis is going to be $790. And then 2 weeks later, you sell one for $34. And then your cost basis is $766, and so on and so forth. And then your profit is going to be, your total profit on the entire play is whatever the whatever this number ends up, whatever your cost basis is, subtracted out of what that long call is worth. So like for example, 813, let's say in 6 months or 9 months that thing is worth, it could be worth, I don't know, $20, something like that. And then so you'd subtract the $766 from your $20, and your total profit there would be what, $1,234. So $1,234. And that's you could just literally, in most occasions, just buying that long call. Like if all I did was buy that call for $820, chances are I'll probably be profitable on that, and that's without even selling against it, because it's already in the money, and generally stocks go up. So that's why you buy them a little bit deeper in the money, and that's why you buy them with a lot of time. You're not going to get the crazy upside that you would have on a shorter term play, but the stock also doesn't have to move very fast. You created, exactly. You need spreadsheet is perfect, and that's what you need to calculate it, because then you can see how that changes over time. Let's see. Yeah, send it over, man. Yeah, send it over. I'll take a look. I mean, it should be pretty simple. Should be really simple. I should do it more often, but the fact is, like, when I'm making most of my plays, I'm in my car between appointments, and I'm just doing it. I lose so much money actually waiting to record it. Sometimes I realize, like, I'm like, okay, I need to like make this trade, but then I want to record it every once in a while. So, and then by the time I actually record it, like, the stock has moved too much, and I pay for it. But at the end of the day, like, the reason to buy it is just to be able to capture the equity at $20. So my intention is in the future to actually exercise this. Where's the exercise? So there's actually an exercise button, and buy these shares for $20. That's what I'm thinking. Jason, love your story, brother. I'm in Logan's Discord and have been enjoying my time. Did you just roll your profits into more plays and compound and get to where you are now? I did. So I've actually taken a lot of money out of my account too. So I started that account with 575 or something like that. Or this account, I've taken $50,000 or $60,000 out, and the initial couple months on this account though were just like amazing. I mean, that's when everything was dropping, and I was able to buy some puts, and they just, like, I had like a couple weeks where, $600 went into 50,000. So that part was just nuts, and then the other part's just been kind of a slow creep up. But I own mainly spreads. Yes. Okay, so yeah, I've gone over it a few times, but this is what happened. So initially, I just had puts. I bought a bunch of puts because that's what I thought was going to happen with the whole coronavirus thing. And so I had SPY puts. I mean, like, everything was just like printing money. TLT was huge. The bonds were huge at that point. And then so I played those initially, got to about 50 grandish or so, and then I was just like trading sideways for months. Like, I'd have like some winners, some losers, and then I really settled in to put credit spreads, and I love them, even though like the last overall the last few months haven't been great, but they're mostly on Tesla, and Tesla had that rocket up. It's kind of on its way down, and I'm still positioned to be back where I'm at or above once Tesla goes up, and I'm very, very highly confident in that. I think I think like a few years from now, that's going to be a couple $1,000 stock. Like, worst case scenario, maybe in a couple years it's $1,400. I still feel it's like one of the biggest values. You can share it. Let me know if that works. You can just like email it to me. Let me see. Let me get over here. I'll see if it comes out. I should be able to get it. But yeah, I really love put credit spreads, because it's like, zooming out on anything, it just doesn't even matter. Like, right, a year with the pandemic in there, whatever, how far we can go, 3 years, it doesn't matter. Like, they tend to go up, and if you're selling the liquidity on the downside of it, it's just gonna win. Did you ever implement debit spreads in your strategies? I play a ton of stuff, but like my bread and butter main thing that it really clicks with me is put credit spreads. Yes, I have debit spreads on right now, and we can go over this. I'm actually planning on buying in the next, I think next week. I will probably buy one that's about 6,000 or so. I am looking. Okay. I'm just seeing if I got that in my email yet. I did not. But it's just thetaprofit@gmail.com if you want to send the spreadsheet and I can take a look at it. Let's see. Let me jump over. Yeah, so I have debit spreads. I do play those. Poor man covered calls. I just let's see. So I have some end of the year. Let's go. Where are they? Yeah, so I have some call debit spreads expiring January next year. So I have 3 of those. Did I have some more? 3, 4. That's not. Oh yeah, and then expiring in December. I have some 990s actually. So I have a few of those, but I want to look at. I'll show you the ones I'm looking at. I'm pretty positive I will end up with this next week. I'll post it when I do, of course, because this is expensive. So I'm gonna go all the way out to June, and I'm going to buy the 900, and I'm gonna sell the $1,400 one. So this is what this will look like. Yeah, it was about $6,000. I have $6,000 worth of cost. Break even is a whole $963, and that's June 2023. So that's 2 years. And I'm so confident that Tesla's going to be about 900, well above 900, 1,200, 1,500 or something at that point. And my max profit is 40 grand off of this play. So this is one of the debit spreads I'm looking at. That, and I want to buy, let me see, there it is. Okay, cool. Remember share cost? Yeah. How do I just make a copy of it anyways? Okay, I'm view only. Yeah, I can't mess yours up because I'm view only anyways on it, Jacob. So, but I'll check it out. Maybe I'll actually start logging in some of this stuff. I really should do that on my Palantir because I've made all the Palantir slides up until just kind of the setup on that poor man's covered call, but then I want to actually do the spreadsheet, but I need to grab all my trades, all the ones I've sold against it, to show exactly where we're at right now. With debit spreads, you pretty much have to hold them until closer to expiration. Yeah, there's going to be so much extrinsic value, so they're not going to go up. You don't have to, so if I was to buy this now and it went up to $1,200, it would be worth, way more. But for max profit, 100%. You just can't get max profit because the fact that you sold something that's far out is going to have tons of extrinsic value. But I just looked at that and I'm like, $6,000, and I'm only shooting for $963 in 2 years on Tesla when they're projected to have 50%, at least 50% year over year growth. And they have so many crazy catalysts that could rocket it up. I think Cybertruck is going to be a good catalyst. I think like as soon as that Model 2, I mean that's what other people are calling it, but as soon as somebody as soon as that's like released and they're like, hey, here's a $20,000 car and you get a $100,000 or a $10,000 tax credit, like when you can buy a Tesla for 10 grand or 15 grand and then there's like no maintenance on it, like that's gonna be huge. If full self-driving ever comes to fruition, if robotaxi ever comes out, when semi actually comes out, like all these things, and I would just love to secure it. And I mean, I could buy that naked 12,000. It's kind of actually a toss up. That is an expensive call there. But I could buy two of those for that same $12,000. Still a lot of money to have out there, but in the scheme of things, I think that'll be a pretty darn good play. I wish they had one like a little bit higher. God, you could buy these. So what is this? This is, I'm just curious. 2,000 for an $8,000 gain. Nah. Yeah, we'll go with that though. I would like to buy some naked calls though. That'd be kind of nice. So that one I'm looking at, and Baba actually, and the only reason, and I think I'm looking at, there was a $5,000 or $6,000 play in that one too, and I was waiting. It was funny. I was talking to Logan's buddy. We were hanging out last weekend, and he was looking at like the almost exact same one, but I think I was either looking at it. Let's see, maybe it was like, it must have been like May 28th then. So I was looking at buying this call pretty far out, and then like literally the next day it spiked up. So I didn't want to buy it yet. But I think I've seen a lot of really good analysis on Alibaba and the fair market value pretty close to like the $300 range. But I think I was looking at like a 180. Let's see. Yeah, there's a 0.7 delta on this guy. So I may buy one of these too. But $6,000 break even for 2 years is only got to be $241. So it's only got to go up $30 for me to be profitable on it by June 2023, which is like, I don't know. And that's the only thing that's scary about Alibaba, because it's a Chinese company, and you know, depends on like if we have more tensions or anything like that, or we get somebody else back in the office and they decide they don't want certain Chinese companies listed on our stock exchanges. That's the only thing that scares me away from that a little bit. But I think this could pretty easily, it could see a $300 stock price, like not too difficult too. And even when I'm looking, go back to my favorite. Because what did we hit? We hit 319 at one point, and I think fair market value was somewhere like 306 on the last analysis that I saw on it. So I think that's going to be my next big purchase. I'll probably purchase those in TD Ameritrade. Yeah, down to 211. I think that's a steal. Let's see. I think that was That was the big thing that I wanted to go over, though, was just like where you sell those, where those poor man cover calls, like where you need to sell the call. And also, Jacob, let me just mention on this thing too. So even if you were to sell those, we can go back to, are you doing the Palantir play? I can't remember. But even if you were to sell them, the options, like let's say you'd sold it closer to the money, like one expiring sooner, like $26 or something like that, and you needed to move it, you still would be able to, as long as you're monitoring it, you'd be able to buy this back, and then you can see what the difference is. So like let's just go like an even number, or no, let's do at the money, 25. So you, okay, cool. So like at 25, you still, if let's say that went into the money and you're afraid of your shares going away, you can still basically roll that all the way out to your long leg, and you can sell that same one for $6. So there's still room. But that's just like 100% guaranteed way that you would never, ever possibly lose $1 on that play. So there's still a long ways, like with the actual extrinsic value, you could slide those out. So like right there, we can see that's about $500 worth. So you can screw up about $500 worth and still be able to roll that out. And at that point, if you roll it all the way out to there. You should be able to capture most of it. And if it comes back down, then you would have to be able to roll it. so I've done this in the past. So where I was afraid of losing shares, I rolled it out in the future a bit, rolled it out and up. And then when the share price came back down, I was able to bring them back a little bit, because those longer dated ones lost value pretty quick when share price went back down. So I actually did that on Lemonade, and I did that on one of the airlines. Oh, Hawaiian Airlines too, because I think that had spiked up. Hawaiian Holdings. Oh, see, I have two $25. Geez, that's what I get for not paying attention. Oh, maybe I didn't. I can't remember what I did here. I may have rolled them down. Where's my history? I know for sure I did on Lemonade. I thought I did on Hawaiian though. But basically these shares are going to be gone at $25. If I get closer to the end of the year, I could roll them out a little bit more, but I don't care. So guaranteed profit, you need to sell against cost basis. Yes. Then you wouldn't even have to think about it in case of the crazy event that shares actually got called away from you, because then your long call would automatically get executed. And then that's all it would show in your account is you buying them at 20. Like for me, if I sold them at 30, went above 30, got called away, then I'm buying them at 20, selling them at 30. That's a $10 profit on each one. So $1,000. My cost basis was $690, so profitable at that point. But yes, just sell above the cost basis. The cost basis, your strike price plus your cost basis above that level. But I think you got it. You must. What are you selling your Wheeling Palantir? What are you selling your calls at right now? I still want 1,000 shares of it really bad. And I think I don't even remember how much we have. We have 380 shares. Yeah, getting there. Almost halfway there. 380 shares. I have these three, which I'm planning on executing, so that'll be 680. And I have one at the end of the year, a $30 call too. But I buy. Does it show it on here? I do buy some every single day. $20. Yeah. $20. I buy $20 worth of Palantir every day. You got called away on your shares, made $350. That's awesome. Okay. So do you buy them like at 18 and then called away at like 23 or something like that? I just talked to my buddy who's literally, he's since I think for about a year now, all he has done is the wheel on Tilray. That is absolutely it. And he's up like 150%. He started with he started with 25. I can't remember. He said he had 75,000 in his account at some point, but he's paid back the 50, 25 or 50. He has, and he's now getting $5,000 a week on his Tilray shares. But he has like, I don't know, he must have like 100 grand worth of Tilray, which is insane. And he just does the exact same thing every single week. Bought at 22, sold at 24. Nice. Do you keep a spreadsheet for all your stuff? That's smart. Good Lord. 22. Yeah. It drives me like a little bit nuts because he doesn't do any credit spreads, no nothing. He's been, he was like, I don't know, like it was down. He said, yeah, it's down to 14 or 15 bucks. And he was still selling them. I don't know what he's even selling them at, maybe 22. But he literally like I think it's every Monday, he just sells it for that week. That's all he does. 5,000, I think 5,000 shares is what he has or something. Must be, right? Because he said he has 100 grand in there. Yeah, must be. That's just crazy. Trade options. About to get some Tilray, and I don't even like weed stocks. So let's see. So you must sell the call. I don't know what he's selling. I think he said 22 or something like that. Oh yeah, there you go. $56. So he probably is gonna sell those on Monday for 22 bucks. So he's got 56 times 50, 2,800 bucks, and that's every. God, he's gonna be making 10 grand a month. Good God, it's too much for some weed stocks. Not for the will, because it's pretty straightforward. Yeah, it's good. I don't track any of it. I really should. Just my overall balance. Okay, let's say your long call break even is 30. I sell a call for $1. Am I stuck? I sell. Okay. My break even now. Wait, your long call is break even as at 30. That sounds right, except for I'm not totally getting it. Are you talking about doing, like using it to calculate the wheel? Because your long call, that's the only thing I'm tripping up on is your long call break even. Like, what's it? Are we talking about like you bought one, like you bought a 20, for a poor man's cover call? Okay. I see. So like when you're looking at, I don't know. we'll just like look at one of these. So like when you're looking at, does it show it on here? God, I hate this. I'm gonna look at my own. So like, okay. So like your break-even price as of like whatever it says right here, because that's just gonna be, because this is just your, I mean it's literally your strike price, $20 plus my average cost, $6.90. That's like, that's the only difference there. And then you sell a call for $1. And then your profit, yeah. I mean, it's whatever the difference is minus whatever collateral you take. I think if I'm understanding it correctly. I mean, is it like when you fill it out too? I could look at it, just make sure it just makes sense. It should be pretty intuitive though. Because my goal for this long call is to make the cost basis like 0, pretty much, which would be super awesome. Because right now, what is it? My extrinsic value is, I'm only paying like $300 for that, because it already has the 404. What is it? 459. Yeah, it's like all those numbers are gonna start like clicking when you can see like intrinsic and extrinsic value, because right now the intrinsic value of this is $459, right? The, like, if I exercise this stupidly right now, I can buy these shares at $20, sell them for $24.59, which means, and then 100 shares, which means I have a $459 profit if I exercise that right now. So that means $6.90, which is my cost basis, and I take out the $459 worth of intrinsic value. So really, I'm paying $231 right now for a year's worth of to hold this thing for a year. And then I get to subtract out whatever premium I've sold. So I think I've sold $50-$60 worth it, so I'm only paying like $100 and something, and if I can sell the rest of it, between the intrinsic value growing and my cost basis going down, this should just turn into something profitable. You've been holding a call credit on NVIDIA, 747.50. I have not. I've God, so funny. Like, I'll hear people call them out or just like see stuff. I haven't. What has NVIDIA been doing? I think I own some NVIDIA in one of mine. Oh, good Lord. You like, slow down. Oh, Lord. Yeah, that's been running. Holy smokes. That's insane. And it's funny, like, it gets scarier and scarier as it goes up and gets closer to it. But it, like, which is kind of counterintuitive, because it should get a little less worrisome, because why would it just keep going up? At some point, everybody who bought it has bought it. Oh man. And it sucks with being on the call side. Like, you can't always just roll it out and expect it to go down. They go up with, I can't actually remember my long term. If I picked AMD or, because I think I have some leaps on AMD too. They're doing pretty well too. It just keeps going. Yeah, it sucks. You're like, it's funny when you're actually legit rooting for a stock to go down. That's where I don't want to. I like my Tesla, my stock covered calls on it. Like, please don't go up too fast. Don't go up too fast. Right now, I'm super happy with where it's at. That was a nice little candle at the end of the day, though. I got this thing all kinds of marked up, though. I'm gonna clear all the patterns. Can I delete? In my lines. Remove drawings. Yes. This looks to me though like it just has a monster, like that just looks like a monster wedge to me. Like you look like what happened here when it consolidated over what that was 3 months of consolidation here. What from August to November, and then now it looks like the exact same thing, just a monster wedge. I'm excited and kind of scared for the day it pops up. I think our next stop is, I don't think it's gonna bounce off like the 900. I think it'll be quite a bit above that, the 1200, something like that, and then it'll consolidate for a while. So a new person wants to start playing spreads for earnings. What advice would you give to a beginner? Paper trade. Go get into TD Ameritrade or I think WEBULL and use the paper trading. Like just do it for free. Either play spreads or play it on companies that you know, and that you have a good idea what's going to go on, and like get into the company, know more about it than just the name. So you know like what kind of things that you're going to be looking for, like if there's like what factors are going to play into it basically. So yeah, just play and then tell like some of your predictions and write down what you think is going to happen, and then compare it to what happens, and then kind of learn from that. Listen to earnings calls. Those are if you've never done it before, they're actually pretty interesting because they just talk about whatever business it is on the whole. Like you can go back to, most of them are available, so you can go to like Walmart or Target or Tesla or whatever, Facebook. You can go listen to the earnings calls. They're actually pretty interesting because they talk about all the financials, what's affecting them, like what their projection is, and then you can also compare those earnings calls to what you see the company actually doing, and then maybe make some predictions based on that. If you want to play it statistically, you know, there's a lot of different theories for that, and I would probably look at Tastyworks and watch some of their stuff specifically on earnings. But that's what I would do. Is there a particular stock you want to do it on, or you just like want to play earnings? And earnings has been so nuts, so it's going to be like whatever we saw this year is definitely not what we're going to see next year. And because we saw like fantastic earnings, like really good kick-ass earnings, and then the stock dropped, which is nuts. It happened like all over the not this like last quarter, but like the fourth quarter, first quarter, saw it happen over and over again. Everybody's like, what is going on? You look at Tesla's earnings, and then the stock drops. It's crazy. And then after you do that, I write down like exactly what you're planning on doing. Like if you're planning on doing an iron condor or something like that, or maybe a strangle straddle, depending on what you want to do, and then follow it. Just keep doing it. Keep a log, keep a spreadsheet, see where you're winning and losing, and then see if you can go back and learn from your mistakes. And then, yeah, I think that's what I would do if I just wanted to do earnings. Earnings are super fun on some low IV stocks, though. Stuff that should not move. That's where you can, if you play some naked stuff on those, you can make a ton. You can make an absolute ton on those, but it's not very consistent or methodical to be able to do it that way. Oh, I need to. I need to. Forgot I need to send a message out. So this week, what was it? The beginning of this week, I decided I'm not going to eat meat anymore. Pretty crazy change for me. Decided I'm going to be a vegetarian, not a vegan, and realizing I need to meet some Eastern Indian people and learn how to deal with some of that food, some of the paneer. I bought some, cooked it, kind of like a little bit weird, kind of sidetracked thing, but I was just messaging my girlfriend that, yes, I need her to pick some up. I'm heading out too. Yeah, cool. I'll shoot you an email back or something like that, or maybe just make a little video about it. I'll copy it because I can't, like, however you shared it, I can't edit it, so I can't screw yours up at all. But I'll make a copy of it, mess with it, and I'm sure it works fine. I mean, it should be pretty basic math behind it. So yeah, I'm gonna get going too. I think we've been on for an hour and some change, but oh no, I guess just an hour. I started a little bit later than I thought. Hour is perfect. Unless anybody has any other pressing issues, I'm gonna go get to the sunshine and the other work and all that stuff. And we'll all pray for NVIDIA to go down just a little bit, or hold or go down, so you can get out of that thing. June 25th. Well, you have 2 more weeks. God, 2 weeks is so long sometimes when you're getting scary high like that. All right, guys. Hope you guys have a great rest of your weekend. Love you. Thanks for all the likes. Thanks for stopping by. I know you guys can be doing anything, and this is way fun. So, all right, have a great week, and we'll see you on Monday.